The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
A beverage company and a restaurant have made the growth and income list this time around. Todd Bunton, our growth and income strategist, is going to tell us more. First of all, the beverage company is one that I think you've talked about before.
I have.
Dr. Pepper Snapple?
Yeah. It's a nice little company here. I mean, when you think of the beverage companies, you think of Coke and Pepsi, right? But a lot of people overlook Dr. Pepper Snapple. In addition to those flagship brands, Dr. Pepper and Snapple, they also own a portfolio of several other solid brands, including 7-Up, Squirt, Crush, Sunkist, A&W, a lot of non-carbonated beverages as well, Mott's. They have the Hawaiian Punch brand. Nice portfolio of brands, and they delivered very solid results. They've actually delivered 5 consecutive positive earnings surprises, and that's driven earnings estimates significantly higher over the last several months. Back on October 23rd, they delivered another nice beat and raise. They beat on both the top and bottom lines. Management increased its guidance for the full year.
That's kind of unusual, isn't it, to see a company beat on top and bottom?
Yeah, especially a company this size. That's something you like to see. I call it the triple play. If a company can beat on the top line, the bottom line, and see management increase guidance, that's good.
It's a trifecta.
Exactly. So a lot of good things are going on here. And if you look at the price and consensus chart, you can see a nice steady increase in consensus estimates over the last several months. As I mentioned earlier, they've delivered 5 consecutive positive earnings surprises. So very strong earnings momentum going on here. It's a Zacks rank of 2, which is a buy rating. And based on those consensus estimates, analysts are looking for about 14% earnings growth this year and 7% growth next year. So nice growth story here, and a good income play too. They pay a dividend that yields 2.3%. And if you look back over the last 5 years, they've increased that at a 22% compound annual growth rate.
Not bad.
Yeah, so very income friendly here. And you get all that at a fairly reasonable price. They trade about 18 times forward earnings. The peer group is at 20 times, so it's a slight discount to that. And they're trading about 18 times enterprise value to cash flow, which is another metric I like to look at. Not super cheap here, not as cheap as it was earlier in the year. The stock has appreciated throughout the year along with those rising earnings estimates. But there could still be some positive momentum looking out over the next 3 to 6 months here. Could be good total return name.
Okay. DineEquity is the parent company of Applebee's Bar and Grill.
Yep.
Grill and Bar, whichever you prefer.
Whichever.
They're doing some good stuff too.
Yeah, they are. They also own the IHOP brand too. So two kind of different names, but yeah, both in the restaurant space. Now, they franchise the vast majority of their restaurants, so a lot of their money comes from royalties based on gross sales of those individual restaurants. But both of these companies have seen pretty solid results this year. Solid low single-digit growth in same-store sales, and that was on display last quarter. The company again beat on both the top and bottom lines. That was driven by solid same-store sales revenue at both Applebee's and IHOP. And management actually increased its same-store sales guidance for the remainder of the year. So another, kind of trifecta there that we like to see. And that prompted analysts to raise their estimates higher going forward, as you can see in the price and consensus chart. Another nice stair-step pattern in those consensus estimates. Love to see that. It speaks to good earnings momentum. This one is ranked as a Zacks rank of 1, which is a strong buy. That puts it in the top 5% of companies based on earnings momentum. And if you look at consensus estimates, analysts are looking for about 11% earnings growth this year and 22% growth next year. Not bad for a little, for the owners of Applebee's and IHOP. They do have a ton of restaurants, I should mention, 2,000 Applebee's and 1,600 IHOPs throughout 19 countries. So huge global presence here. But in addition to the growth, they pay dividend yields 3.6%. So very good income here. That's about as high as you'd see on a REIT or an MLP. So very good on the income side. That might surprise some people. And they recently increased their dividend by 17%. So they're continuing to reward shareholders through that. And you get all that at a pretty reasonable price. They trade about 17 times forward earnings. The industry median's at 18 times, so it's a slight discount to that. Again, very positive momentum in this company, both on the earnings and price side. But there's no reason that can't continue over the next 3 to 6 months.
All right. Do you own either one?
I do not.
Check out other stock picks and stock picking strategies where? On our website, Zacks.com. If you're not there already, get on over. Link to it off the home page with Todd. I'm Terry Ruffalo.